I'm Shirley McGee, owner of Home Sweet Home Care. We do in-home companion care for seniors. And when I'm out doing new client assessments, of course the question comes up is, very often is, how are we going to pay for these services? So typically folks in that generation don't have long-term care policies, and Medicare does not cover our services. So that means it's going to be a private pay out of pocket expense. And to cover that expense, of course, folks have saved for their rainy day. But if they need a little help in that department, they can do a reverse mortgage on their home. And I know there are a lot of misconceptions out there about reverse mortgages. So the reason that I'm here today is to bring in the expert, Ben Newell. He's with Town Bank, and he strictly does reverse mortgages. So Ben, can you tell me what a reverse mortgage is?
Yes, Shirley, thank you for inviting me today.
Sure.
A reverse mortgage, very simply put, it's a FHA government-insured loan program,
Okay.
which allows any homeowner that is 62 and older, allows them to have access to the cash equity in their home. And when they do that, there's no monthly mortgage payments to pay back living in their home for the rest of their life.
Okay. All right. And the 62, that's key. I did not realize that.
That's the key. Yeah, you got to be 62 and older.
Okay. All right. And why would anyone consider doing a reverse mortgage?
Well, over the years, I've been doing reverse mortgages now for about 8 years now.
Okay.
And I've found that I can put the homeowners really in two categories.
All right.
There's the need category and there's the want category.
Okay.
And I sort of simply defined as, let's say like somebody in the need category, they're living on a fixed income. They've got Social Security and that's pretty much it, no retirement coming in.
All right.
And as you know, living expenses are going up daily.
Yes.
Medical costs are going up daily. Prescription is going up daily. In-home care is another big concern for the senior community.
Right.
So when they're in that category, as far as the need category, they don't know where to go in terms of getting cash to pay for all these daily living expenses.
Okay.
So that's why they want to consider doing a reverse mortgage.
All right.
And the other category is the want category.
Ooh, I'm interested in that.
That's where they may be living comfortably.
Mm-hmm.
They maybe have a Social Security income coming in. They may have retirement income coming in, and they also maybe have a nice cushion in terms of savings and investment accounts and 401k and stuff like that. However, when they get to the situation where they're going to start considering about some in-home care,
Yes.
maybe they have gotten to the point where maybe they've got a financial advisor, and that financial advisor has said, I don't want you to tap into your investment accounts, or I don't want you to tap into your savings. You need to save that for your retirement years. So as another option for them to consider is to go look at a reverse mortgage where they can get the cash out of their house. So those people fall into the want category.
Okay. So it's another income stream for them.
Correct.
Okay.
Exactly.
All right. And how does somebody qualify for a reverse mortgage?
It's real simple.
Call
Yes.
you?
Call me? No, it's really it's simple. It's all you do is be 62,
Okay.
own your own home, okay,
Mhm.
and have enough equity in the house. That's the only qualifications right there.
Well, that seems pretty simple.
And it really is.
Okay.
Because if you think about it, if somebody was going to go and qualify for a regular mortgage
Yes.
to refi their home and,
Yeah.
and to get cash out, what they're going to have to do is they're going to have to qualify based on income, based on their credit and credit history and credit score,
Okay.
and have enough assets in the bank. Well, in the reverse world, none of that applies.
All right. I like simple.
It is simple.
And how can they receive their qualified cash funds from the reverse mortgage?
Well, there's three ways. The most popular way is people can receive it in one lump sum.
All right.
It's then the next way is what you call an equity, not an equity, but a line of credit.
Okay.
That's where they take the money that they would have qualified for
Mhm.
and they just put it into a line of credit. portion they don't use, they don't owe.
Okay,
So I'll give an example, let's say like, they qualify for $50,000, and they put $50,000 into the line of credit, and only used $1,000 a month to, to pay for, for medical expenses
Okay.
and in-home care and stuff like
all
that.
right,
They only owe the portion they use.
okay,
Yeah, that's the second most popular way. And the third way is they can receive monthly payments from us, the lender. And they'll receive that check for the rest of their lives until they sell their home.
so Ben, tell me, with your reverse mortgage, does the house have to be paid off for somebody to come to you?
Not at all. In fact, I find that probably 95% of the time, the mortgages are not paid off.
Really?
And it's true. And, because actually the first thing we have to do is pay off that current mortgage, which
Okay.
means that their current monthly mortgage payment will be gone. And that'll be a wonderful cash flow for that individual that they
Absolutely.
don't have now.
Okay,
So-
that payment's history.
That payment history will be gone, exactly. So,
Okay.
give you an example. If they had a $1,500 a month mortgage payment, and you subtract out the real estate taxes and that homeowner's insurance,
Right.
they'd probably be netting out about anywhere between $1,100 and $1,200 a month in positive cash flow they keep in their bank instead of paying to the lender.
Oh, that's a good thing.
Yes, it's a good thing.
Okay, all right, very important information. I just always assumed that the house had to be paid off before anybody could make the call to you.
Yep, not at all.
Okay, and what kinds of safeguards are built into your reverse mortgage program? Because sometimes, I have to be truthful, when I mention a reverse mortgage, people kind of cringe. And, there have been really bad stories out there about folks that have been doing reverse mortgages that really should not have been, and they weren't doing them correctly.
Absolutely will. But the program's been out there since 1989. And there's a lot of been upgrades to the program, and a lot of safeguards have been built into the program. And I'll give you some examples.
All right?
Now, contrary to popular belief, what the public is being told all the time, they do retain ownership to the house.
Okay.
The bank does not take the house away from them.
Yeah, because the children, the adult children really seem real concerned about it.
Absolutely.
Yeah.
So that's number one. Number two, none of the children or the family members are responsible for the loan whatsoever.
Good to know.
Okay. Number three, there's no payments back. The only way the loan can ever get paid back is by selling the house.
Okay.
Okay. Number four, it does not affect any Social Security or Medicare benefits whatsoever.
All right.
Okay.
I never even thought about that aspect of
Yeah,
it.
that's important because they always think about those things.
Yeah.
Okay.
Yeah.
And then the number five, there's no taxes to pay on the money that they receive. And also, in the sixth safeguard is that they will never owe more than the house is worth. And that's important because,
That would be very important.
yeah, because, in this market that we're in right now, if they had a traditional mortgage on that house, typically, when you owe more than the house is worth, that's called a short sale.
Yes.
Well, the homeowner always loses. Well, in our world, in the reverse world, because they never owe more than the house is worth, when it comes time to sell the property, if there is a shortfall, in other words, if they owe more than the house is worth at that time, because it is an FHA government-insured loan program, now they will write a check for the dollar difference at the closing table. Now, that's why because it is an FHA government-insured loan program, that's the reason why that safeguard is huge in
Yeah.
there. It really is. It protects everybody.
Yeah. Because I know so many times, the client, said, oh, reverse mortgage, but then there won't be anything left for my kids. And number one, your kids are adults, so stop worrying about your kids. But number two, that's not, that statement isn't true.
Well, here's something else too, to think along these lines. We always invite the children in on an initial consultation with the parents, okay? And if they elect to show up for the consultation, 99% of the time, the children are gonna tell mom and dad that, Mom, Dad, you've worked long and hard all your years.
Yes.
You deserve to enjoy your retirement years. I don't want your home.
Yeah.
We have our own house, we have our own family, we have our own careers, we have our own money. You enjoy the house. If you want to wanna do the reverse, take the cash out to help improve your retirement years,
Yeah.
help improve, pay for in-home care or whatever it may be, we're for it.
Excellent. I get this from the adult children too. Mom is in the house and she does the reverse mortgage. When mom passes away, what happens to that reverse mortgage? How is it repaid?
Okay, well, remember I mentioned earlier that no children or family members are responsible for the loan?
Yes.
Well, when mom passes away, whoever the last adult passes away, generally there's gonna be a child that was been to be appointed to be an executor to the estate. Generally.
Yes.
Okay? Whoever that child may be, that child now will have two options to do when parents pass away. Option number one is, if they want to keep the house for whatever reason, all they have to do is pay off the balance on the mortgage, and then they bought that house for pennies on the dollar. Okay?
All right.
Most children do not choose that option. Probably about 95% of the children choose option two, which is to sell the house. So they go get it listed with a real estate company, put this for sale sign and put it in the yard. Then at that point, they'll have 1 full year to sell the house. Now, can a house get sold in a year's time? Typically,
Yeah.
typically, it all depends on the market
It
condition,
does. It
the
does.
neighborhood, the price point, all
Right.
those things roll into one.
Right.
But typically, it can get sold. So when the house does get sold, naturally, the first thing that's always paid off when you sell a house is pay off the balance on the mortgage.
Yes.
And then whatever cash proceeds are left over, that'll go right to the estate. And whichever child was the executor of the estate, that child will disperse the money according to their parents' will.
Okay.
So it's a win-win situation.
Right.
All these safeguards are built in, everybody's protected.
Okay. What happens if it doesn't sell after a year?
Then that's when the bank has the right to take the property back, okay? And now the bank will be responsible for selling the property. So the same scenario will play out. The bank gets the house sold, they pay off the balance on the mortgage, and if there are any cash proceeds left over, it still goes back to the estate.
Okay. So I know we've gone over an awful lot of information today, and it's information that I didn't realize. And I know people are going to take away a lot of, really good benefits from this, but they're also going to have a lot of other questions. So how can they get in touch with you apart from the broadcast today?
Well, the best way to get a hold of me is just call me at 687-5000. That's the office line. Or you can go to the website. That's townbankmortgage.com/Ben Newell, Newell. Or you can email me, and that's ben.newell, Newell, @townbankmortgage.com. So you got 3 different ways there.
Okay. Should be able to grab you at one of those spots.
Should be able to.
Okay. Well, I so much appreciate you coming in. It's always good to see you.
Good
And
seeing
thanks
you.
for the great information.
You're welcome. Thank you.
Okay.